Today, I really want to talk about our enterprise risk management framework, which is a vitally important framework for us in terms of the way we identify and manage risk in the bank. This framework was launched last year in 2014 and is going to get really fully embedded in 2015. And I really want to highlight and express the fact that it is vitally important in terms of the way we manage our bank and the way we manage risks, that we get this right and we keep investing time and energy in this area. Because increasingly, as we've seen, risk management is going to be crucial. It differentiates one bank from the next. And I think even if you look at the investments and time the management team and the control teams have put into embedding this framework, we've already seen the early dividends. If you look at the last 2 years' operational losses and fraud losses, those are significantly lower than they were when you look at the previous trend of previous years. And this, I don't believe, is accidental. This is as a result of a more rigorous risk assessment and identification process, as well as then taking the appropriate actions to mitigate those risks. So for Barclays Bank here in Kenya, I want to stress a few things. I think first, this is vitally important to us achieving our vision of becoming the go-to bank. And I can't understate that. I think second, I think we all need to be very clear what our roles and responsibilities are within this framework. If you cannot articulate and do not understand your role within this framework, I suggest you reach out to the risk colleagues who can help you understand that, because that is imperative.
Good morning, colleagues. My name is Juma Arogo, your Chief Risk Officer. This morning I'm very pleased to be able to talk to you about the Enterprise Risk Management Framework, the ERMF. The ERMF is a document which sets out the tools, the techniques, the organizational arrangements which allow us as Barclays to identify all material risks we face, how we respond to those risks, to help us meet our business objectives. So the ERMF is a tool which sets out all these organizational arrangements, our risk appetite, our go-to management risk process, our principal risks and key risks, and who these people are, who manage the principal risks and the key risks, our policies and standards, and the 3 lines of defense which allow us to effectively manage risk. Risk appetite is about the level of losses that Barclays is willing to accommodate as we pursue our business goals, recognizing that as we pursue our business goals as an organization, there's a range of possible outcomes. So risk appetite helps us to recognize this range of outcomes and sets out what are these key risks that we are willing to take, what are some of the appetite frameworks that we want to put in place, why are we not willing to take certain risks, and why are we willing to take certain risks, and to what quantum of risks that we are willing to take. I'm going to tell you about the risk appetite framework and how it fits not just into the overall ERMA framework, but how it fits into our overall management of Barclays. Risk appetite speaks to our strategy and business model. It speaks to our performance targets. It speaks to our legal, regulatory, and fiscal requirements. It speaks to our reputation and what our stakeholders expect of us. And we have a wide range of stakeholders, from regulators to customers, to business partners, to employees, to suppliers who do business with us. Risk appetite also speaks to our capacity to take risk, our capacity to manage risk, to put in place the right systems and capabilities to manage risk. And also, very importantly, it speaks to our purpose and values. Risk appetite is approved and disseminated across key risks and businesses, including the use of mandate and scale limits to enable and control specific activities that have material concentration risks implications for Barclays. These limits also help us to avoid large one-off losses that are specific to Barclays and outside what our stakeholders expect. So risk appetite is something that is formally reviewed on an annual basis in conjunction with our short-term plans and our medium-term plans. Now, one key thing I would like to highlight is that unlike in the past, where risk appetite largely spoke to credit risk, in the new ERMF, risk appetite is disseminated across various risk types. So for example, we have our operational risk appetite, which captures the appetite we have in terms of fraud losses, in terms of market losses, in terms of losses relating to people, processes, etc. What's our go-to risk management process? It's actually a very simple but effective three-step risk management process, which I would like to use the shortcut ERM: evaluate, respond, monitor. So this is a process which allows us to evaluate all the risks we face, to develop an appropriate response for those risks, and to monitor how effective is our response to those risks. And we do this monitoring using key risk indicators, key control indicators, key performance indicators. And when we see that our response is not effective, it's not fit for purpose, we adjust that response to make sure that our response is really fit for purpose. If you don't remember anything else today, remember ERM: evaluate, respond, monitor. Very important that we all do it, and we all do it well. A key plank of the ERMF is the principal risks and the key risks that we face. So the ERMF sets very clear definition of what generally are the principal risks that Barclays faces. These are risks which are material, present in day-to-day activities. And the principal risks are credit risk, market risk, funding risk, operational risk, and conduct risk. Now, if we take credit, market, and funding risks, these typically arise out of our interactions with clients, with customers, out of the core business activities we do, and collectively they are known as financial risks. And then we've got operational risk, and we've got conduct risk and operational risk as non-financial risks, principal risk, which arise out of failure in systems and processes and people in the course of our day-to-day work.
My names are James Wagura. I'm responsible for operational risk. One important aspect of the enterprise risk management framework is the policies and standards. Policies and standards are important because they are attached to each principal risk. For every principal risk, there are key risks. Against each key risk, there is a policy and framework. The policies and frameworks are used as guiding the performance of those key risks. In order to make that happen, policies and standards are also developed. Policies give the general direction of the expectations of the policy owner. And the standards are the standards that we as control owners must achieve in operation of that policy. So for us, for example, under the principal risk framework, we'll have policies for each key risk. And below each policy, we'll have standards. Attached to standards will also be procedures, the procedures that the end-to-end users will be using on a daily basis. And these are useful in giving the detail around how the policy is brought into operation. The principal risk owners manage the principal risk on behalf of the accountable executive, and in this case, Juma being responsible for operational risk, credit risk, and market risk, and Yusuf Omari being responsible for funding risk, and Labano Mangi taking responsibility for conduct risk. They work closely with key risk owners. Key risk owners are business leaders who on a day-to-day basis ensure that the mentioned risks are managed appropriately and that using the ERM process, all issues are evaluated, responded to, and monitored. The purpose of these key risks is to ensure that they go a level below the principal risks, to ensure that we cover all business activities and make sure that all the risks therein are properly managed.
A key plank of the ERMF is very clear definition of what is called the 3 lines of defense. Now, the 3 lines of defense allow us to separate various risk activities and to make sure that everybody plays their part in helping the bank to manage risk. All of us, collectively, we sit in a line of defense because risk management is all our responsibility, and we all have to play our part in these 3 lines of defense. So the first line of defense includes all our sales colleagues, all our colleagues who sit in ops, includes the MD, includes all those who take risk on a first line basis, includes our colleagues in HR, includes our colleagues in IT. So all the colleagues in first line of defense have a key role in taking first line risk activities. Then we have the second line of defense. So who sits in the second line of defense? It's colleagues in risk, it's colleagues in legal, it's colleagues in compliance, and certain tax and finance functions that report into the financial controller sit in the second line of defense. And these colleagues in the second line of defense provide challenge to the first line and also carry out certain second line risk activities. And then we have the third line of defense. Okay, here we have BIA, Barclays Internal Audit, and we also have our external auditors who are PwC. The third line of defense is absolutely critical to make sure that everything is functioning well and to give that assurance not just to our internal stakeholders, for example like the board, but through BIA, through PwC, to also give assurance to external stakeholders that we are managing our risks effectively.
Greetings, colleagues. I've been asked to speak about the enterprise risk management framework from a Barclays internal audit point of view. The first thing I would like to start with is that the world in which banks play has changed significantly, and there's a lot more regulatory scrutiny and focus on banks and how they operate. And therefore, the enterprise risk management framework is a really great tool that the organization has put in place to allow us to respond to this changing environment. From my perspective, I think there are 3 elements that are really key for me. The first is ownership and accountability. Actually, the first 2, ownership and accountability. And that really is what the ERMF is seeking to drive. That as we operate our various processes and run our business, that we are fully cognizant of the risks that are inherent within those businesses and put in place appropriate mechanisms to deal with those risks. I think the other thing that is really key for me is from a partnership point of view, and this means that from the first, second, and third line of defense, there's a need for the ERMF to have its full impact for great partnership work between the various lines of defense. And that's where internal audit comes in as the third line of defense. And really for us, the key thing we'll be looking at is the ownership and accountability by the first and second line, and also for increasing partnership in terms of sharing views, challenging one another, and seeking to embed this new framework.
The enterprise risk management framework, which we have introduced recently, is really a new approach. It's a transformation in our approach to risks and controls. And at its core, it's about ownership and it's about accountability. And it's about ensuring that every level of the business is aware of its risks and is aware of its controls. It's also cultural. It's about how, as individuals, we interact with the risk and control framework how we own them, and how we make sure that we drive the right behaviors and the right approach in terms of dealing with risk within the business. My key message really to the teams is this is a cultural transformation in the way that we deal with risks and controls, and at its core, the ERMF says that it starts with me. And if every one of us understands the control framework from that perspective, I think we're going to succeed big time as an organization. I don't think the ERMF is about stopping business or about saying that you have to look at every risk before you act, but it's about understanding the risks, making sure that we mitigate, and then getting on with our business and making sure that we are doing business with customers. So it doesn't stop the day-to-day nature of what we do, but it recognizes that risks are real, and it also recognizes that risks are evolving. If you look at the many changes in, for example, the regulatory environment, the many changes in technology, for example, which are introducing new risks into the fraud space, it tells us that we have to be alive to this environment, and we have to make sure that we are constantly changing the way we approach and the way we run the business.
At Treasury, we own the funding risk, which is the liquidity risk, and the capital management risk. For us, this framework is very, very important, because what it does is that it helps us to manage the entire impact that the risk that we're running as a business will have on capital. So we have tried to make sure that in our processes, we have a very robust capital plan that not only looks at what capital we have today, but what is likely to go to be an additional capital requirements in future to be able to address the needs of the business. Remember, any capital breaches can actually lead to severe penalties from the regulator. But I think what it also talks to is the fact that across the region, the regulators are reading from the same script. And for the first time in the Kenyan market, we're having a situation whereby operational risk and the market risk are now being included by all the banks when computing their capital adequacy ratios. And so we have seen capital requirements increase across the industry. And this has forced some of the banks to go out and look for more capital to be able to address the operational risk and the market risk that they're running within their businesses. Why the enterprise risk management framework is very critical is that the more we work towards reducing the overall risk that we are running within the business, it then helps us to manage our capital more efficiently, because then we will be required to keep less capital for this amount of risk. I would recommend to all my colleagues that processes that we have put in place that include RCSA material risk testing is an exercise that should be undertaken by everybody in the level 1, including the CMC member, including the senior most key risk owner within the business. And it's only through that we can ensure that overall as a business, we are managing our risk at that first level before it actually trickles down to impact the business capital or the business operational revenues across the board.
Enterprise risk management for me is actually a way of life. It's what we do every day as colleagues in the bank. And it's all about stewardship, our value of stewardship, because it's about leaving the bank in a better place than we found it. And it's something that we all are called to do in everyday work that we do, whether it's our role profiles, our day-to-day interactions with colleagues, customers. It's something we do to ensure that the bank is in a good position to continue doing business.
But I would like to specifically focus on one of the principal risks, i.e. conduct risk. Conduct risk, as you all know, is the latest of the principal risks that was introduced, I believe, only last year. And it was in reaction to the challenges that we have seen in the banking industry, where a number of important and old financial institutions have had various sanctions coming through from regulators, like the Justice Department in the US, the Financial Conduct Authority in the US, around our behavior, around the way some of our people have behaved. You will be aware, and you will have seen communication this past week around some of the challenges that have taken place in South Africa and the fact that an investigation has been opened. You will have seen the penalties that have been levied on a number of international banks in the UK and in the US this last week. And that is the reason, that's one of the reasons why conduct has become a very, very important way in our industry. This is an industry that is based on trust. And if our customers do not trust us, do not trust our conduct, we will have challenges, and we have had challenges. I think it is important for all of us to be called to action, to make sure that each one of us has a responsibility to make sure that we cannot bring the banking industry, and particularly Barclays, with the steps that we have made in coming from the libel scandal into disrepute again. So I'm calling on each one of you, those of you in the front line who deal with customers every day, that causing detriment to customers should be the last thing that we do. It is very important that everything that we do, we put the customer at the center of our actions. We think about whether that will cause detriment to a customer. We think about whether it's the right thing for the customer, and then think about whether it's the right thing for the bank. So I really want, of course, the other principal risks are just as important, but I cannot overemphasize the importance that conduct risk has since assumed. And my call to you, along with my CMC colleagues and operational risk, is to ensure that we play our responsibility as a first line, and those of us who are in the second line will be there to check and challenge what it is that we see going on into the business.
One of the other very important benefits of the ERMF framework is the discipline that it introduces around how we set risk appetite in the business, and the fact that as risk owners in level 1, we are able, working with the risk teams, to set our appetite, agree what are the material risks and the materiality thereof, and agree what we are comfortable with in terms of risk appetite setting. And by doing that, throughout the year as a business, we know as we conduct our day-to-day business what we are happy with, and therefore it doesn't constrain the business in any way. It just makes us more aware of the risks that exist out there and how we're going to deal with them. Of course, that also introduces the other aspect that whether you're in level 1, level 2, or level 3, we have a similar understanding of the risks that we are dealing with, and therefore it really doesn't matter whether it is a BIA auditor or the business doing a snap check on itself. We have the same view of the risk that we are dealing with. So really my appeal to all colleagues is that we own the ERMF and we make sure that it succeeds. It has the support of the board, it has the support of the CMC, and we should all go and make sure that it succeeds, and the attitude should remain that it starts with me for all of us.
So colleagues, I urge you, let's all embrace the ERMF. It's about me, it's about you, it's about us. It's all of us coming together, putting together a robust control environment, because this is our license to do business. Having a good control environment, being in control of our environment, is our license to do business. So please, join me in making sure that we build the control environment that steers this business to greater heights. I can guarantee you, you have the support of the entire CMC, you have the support of the entire board. Let's make it happen. Thank you very much.
We all own risk management. Across the 3 lines of defense, it is not somebody else's responsibility. It starts with each and every one of us, starting from me, working right the way through CMC and through the respective committees, whether it's the Control Environment Forum or Operational Risk Forums. We own the risk management within this bank. And I think if we each take that responsibility, I'm sure we'll continue to see our operational risk losses continue to be well managed, continue to be the leader of risk management within this industry. And that plays its role in helping us achieve our financial objectives, which are critical. We have big financial aspirations. We want to be a top 3 player. And if we get this wrong, that will flow through into our profit and loss, impacting the way we're perceived within the market. So I'm counting on you all to play your part within this framework and looking forward to it getting even further embedded as we progress with 2015. Thank you.